Welcome back. This is Seewing Yi, and today I'm going to go over a Redfin article dated a few days ago. So let me share my screen, and the headline is a housing market update. There are nearly 40% fewer homes for sale than pre-pandemic. And this article by Redfin is published on June 15th, several days ago, right? And the article mentioned that the inventory has posted its biggest decline in over a year, with homeowners hanging onto their comparatively low mortgage rates. However, many buyers are still showing early signs of interest. That tells me that there are still pent-up demand in spite of the high elevated mortgage rates of around 7%, according to Mortgage News Daily. As a matter of fact, let's go over the Mortgage News Daily website. Right here, the 30-year fixed rate mortgage for people with excellent credit has increased 0.01% since yesterday to 6.95%. And if you compare to year over year, last June 16, 2022, prior year, the mortgage rate was 6.05%. So last June was pretty much the times where the shock of accelerating, skyrocketing the mortgage rate, therefore creating some very big time correction in the second half of 2022. The shock of the sudden rates really surprised a lot of people. So they decreased demand over the second half of last year. Now I feel this is a new normal. So year to date so far, 2023, the mortgage rate were anywhere from mid 6% to 7%. So people are coming to a reality that for the rest of this year, they anticipate the mortgage rates can be fairly high, mid 6s to percent, and yet they're not going to wait any longer. They are tired waiting on the sideline. For those people that can afford to buy a home, they are very motivated to do so. Right. So that's my takeaway. Although we're seeing 40-year home affordability low, still a lot of people are still waiting in the sideline. They can't afford the higher mortgage payment. They cannot afford a high mortgage rate, and they're waiting until the mortgage rate comes down. So it may not happen this year, perhaps. So only time will tell. Right. So let me get back to the main article. The additional highlights on this article is that the inventory crunch is partly due to a home building slump that has lasted for over a decade. So as we all know, the resale side of the equation, the supply side, is extremely very limited, very low inventory. The only way to make up for the lack of supply is for the new homes, the new construction home sales to offset this lack of supply. However, the new home construction, although they're ramping up, it's going to take a while because in the past 13 years, new construction home building has been lagging behind ever since the last 2008 real estate crash. Yes, a lot of people are depending on the new construction, but they're not coming online as quickly as we want to. Furthermore, 90% of the new construction homes are at the pricing of it is quite high. Only around 10% of the new construction homes are at the entry level home prices, typically around 300,000. So because of the profit margin is such that the home builders rather build new homes pricing at anywhere from $400 to $1 million in many markets in the US. So that affects the whole first-time home buyers, especially because there are very few new construction entry-level homes available to offset the lack of supply on the resale side. Right? Does that make sense? All right. But anyway, let's get back to the article. All right. And then pending home sales were down 17% year over year. And however, people are still showing interest in buying. So by the way, I want you to comment on this video below. Tell me where are you watching this video from? What's happening with your local market? I know real estate is very local, is hyper local as a matter of fact. So we are seeing, a bit of a bidding war, multiple offer situation, 3 to 5 offers per house in many markets. And so we're seeing a lot of competitive bidding going on out there because of the lack of inventory. So anyway, and this, let's see what else here. There's a fair amount of pent-up demand. And so right now, demand outpacing supply is preventing home prices from falling drastically. Yes. As a matter of fact, it's for the entire 2022, even though there has been so much negative innovation and all these crash bros reporting home prices decreasing drastically, but that's not the case. If you look at the data, which I'll show you momentarily, in a few minutes from now, the median sales price year over year is only down about 1%. So what crash? No crash being cited whatsoever. So anyway, I'll go over that a little more. So new listings stay low for the time being, and the inventory shortage deepens. So that tells me right now we're in middle of June, inventory will continue to decrease. So we are reaching a prehistoric inventory level, which we have never seen before in our history and the history of the earth. Let me see what else. The latest inflation report shows that price increases have continued to cool, and the Fed announced that it will pause interest rate hikes this month after nearly a year of increases, but may hike a couple more times this year. In a way, this is good news, but the Fed not hiking the interest rate for the foreseeable short-term future, in the next few months at least, I think is a good sign for the housing market, especially if the inflation continue to slightly dip. We should be very optimistic. If not the end of this year, the beginning of next year, 2024, the mortgage rate hopefully will come down to the low 6%, maybe even at the 6% or slightly lower than that. Then that's the case. Then we should see more activities, more demand, even more bidding war that we have seen right now. So in a way, there may not be a good sign. All right. So then what else? Okay, let's go over the leading indicator of home buyers activity. And let's see, let me go over the median home price. It's 381,000, which is again down by a mere 1.1% year over year. And although we're still seeing some home sale price decline in 31 metros, with the biggest drop in Austin, Texas, 13%, Las Vegas, Oakland, Phoenix, and LA. But yeah, that's a year over year. However, I will show you the median price increases nationwide on momentarily. It will show you even in those markets we have seen home price increases this past year, 2023. Do not let this continuing negative headline distort our thinking. Things are rising. Prices are rising nationwide, pretty consistent throughout this year, 2023, second quarter, so forth. All right, so let's see what else that are worthy of discussing. Let's go over the chart. The median sale price, like I said, all that exaggeration of what's going on in the housing market that in the last year has been severely over exaggerated. As you can see, the median sales price was only a mere 1% reduction. Why? As you can see, on last year, we have seen, but the first half of last year, 2022, we have seen like double-digit home appreciation nationwide because of the low mortgage rate, 3 to 4%, before the rates have skyrocketed in the middle of last year, in June, July, August timeframe, and then for demand have plummeted. Then the home prices decreased gradually over the second half of last year. Now they have picked up again. As you can see, this year, 2023, on this orange line, there's a dip around February of our median sales prices. Ever since February until now, for the past 4 months, we have seen some really very interesting double-digit home price increases nationwide. So we're reaching equilibrium. So the median home price as of June in 2023, as you can see, is 381,000. This is a very interesting situation. All right, let me see what else that's worthy of talking about. Again, because the higher home prices and the elevated mortgage rate, the mortgage payment year over year has increased another 8.2%. And this is pretty disappointing, because if you look back to 2020, with the median price of homes back then, the mortgage payment with the low interest rate back in 2020 was around $1,200. No, okay, $1,400, around there. Now we fast forward 3 years, the average monthly mortgage is $2,640 at 6.71 mortgage rate. So this is a record high. In a span of 3 years, the average median price mortgage payment is almost like have increased to around approximately 80%. So that causes a lot of people to can't afford to buy a home. So therefore, again, the 40-year home affordability is in an all-time low. So a lot of people are staying on the sideline that missed the boat, and there's skyrocketing home prices, and the elevated mortgage rate has caused a lot of people to sit on the sideline because they cannot afford to buy a home at today's rate and housing conditions. Okay, so this is a pretty amazing gap, as you can see. So the people who bought 2 or 3 or 4 years ago, you guys are sitting pretty because you're locked in a historical low mortgage rate, and good for you. As you can see, the new listings from year over year, June of this year from last year, is 20% lower. And active listings, same thing. Normally, active listings are in the spring. Housing activity has always gone up historically, but not this year. So this year is really is an anomaly. And so what I'm going to do right now is to go over the Redfin data. In fact, let's go over, as you can see, the median sales price has really increased to a double digit, around 12-13% appreciation month to date in 2023. But there's a lot of multiple offers and happening everywhere. It's interesting. But however, last year, the second half last year, 2022, because of the rising mortgage rate, it has caused home prices to increase many markets, especially the Western region. However, again, I'm just no one crystal ball, but I suspect this double-digit appreciation so far to date, it is not going to come down because people are used to the elevated rate, because this year, 2023, second quarter, we've seen rates anywhere from 6 to 7%. So people are accustomed to it. There's no more shock. Therefore, if the mortgage rate continues to be in the mid 6% to 7% for the rest of this year, we will most likely see home prices to be flattened out in the second half of this year, not to the almost vertical level that occurred the second half of last year, but I would suspect the line would be somewhere around like this, okay, to be like a flat, to be like a stabilizing market. Prices not going to go down, not going to go up too much for the rest of this year. Again, double-digit appreciation, many markets, great this year, but we may see the second half of this year, if the mortgage rate continues to be between 6.5% to 7%, and there's a big if, then the home prices for the second half of this year will be either flat in many markets, and some markets will be achieve maybe single-digit appreciation. I want to hear your thoughts. You may disagree with me with the comments on the video. I'll be more than happy to reply to your comments. I want to hear your thoughts. You may disagree with me. However, the data does not lie. And if you look at all the metrics, okay, the year-to-date new listings as like 23% less listings this year than the past 2 years of 2022 and 2021. Then that's new listings. Pending sales, same thing. Pending sales are pretty flat, 17% less pending sales at a near 86,000 transactions pending sales so far in June 2023, which is 70% less. We're talking last year, there were 104,000 pending sales. And in 2021, there are 116,000 pending sales. So it's a big decline in pending sales. So that's a trend, which is very, very interesting. And then active listings. Once again, active listings normally this time of the year, April, May, June, on a historical basis, because a strong spring selling season normally goes up. However, this year 2023 is an anomaly. Active listings is either flat or slightly going down, minus 6.28% year over year from last year. So that means the homeowners are not selling because they're sitting at a historical low mortgage rate at around 3%. There's no way they're going to move up, get rid of their low rates to buy a home with 7% interest rate, which is essentially more than doubling the mortgage payments. So it's a lock-in effect with many existing homeowners. So they're not budging and until the mortgage rate will come down drastically. That's big thing. So the active listings is a trend which is not a good sign, purely total lack of inventory, and this is very disturbing. Most important thing we understand is the month of supply. The month of supply right now, there were very strong supply of inventory back in February, according to Redfin. We're talking like at least 4.5 months of supply back in February, but the supply has been absorbed, inventory has absorbed quite drastically over the past 4 months since February, now to a point where the weakest supply nationwide, the weeks of supply is 10.2 months, which is divided by 4 weeks per month. We're talking like 2.5 months supply of inventory. We are reaching the third lowest in history in terms of historical low supply of inventory, because last year, June 2022, the supply of inventory nationwide is 2.5 months. And then look at the historical year 2021, the monthly supply is less than 2 months. If you look at it from a purely historical record point of view, history of the earth, the lowest supply inventory in history occurred in 2021. The second lowest supply of inventory occurred in 2022. And the third lowest supply inventory in the history of the earth is a mere 2.5% month of inventory. Again, there are virtually very few homes for sale, and any homes that are listed that are priced well, that are in a good location, that are turnkey, they are sold very quickly. And the healthy market, balanced market is 5 to 6 months of inventory. Right now, we are around 2.4% or 2.4 months of inventory. So it's extremely low inventory. And so this is a very challenging market, to say the least. Okay. Anything else? I think this is it. So my takeaway is, as long as the mortgage rate is hovering around close to 7% at it right now, that sidelines a lot of buyers. However, there are still a lot of buyers out there. As a matter of fact, Redfin reported last month on another article that around almost 1/3 of home buyers in recent months have purchased with cash. So they bypass any kind of mortgage rate situation. They don't need a loan. There's a lot of demand out there. We can't quantify the number of people that qualify to buy a house, and we only speculate. But we could quantify the supply of inventory. That's the data, very precise, very available. So what I'm saying is there's a lot of buyers out there that have a lot of cash, love the real estate stock. They feel over time, real estate have been and will continue to have is a good return for investments. Yeah, you have people buying with cash these days. You have people putting a lot of down payments, and there's a lot of people that still have a lot of money waiting on the sideline, waiting for mortgage rate to come down slightly. But in my prediction, in my optimism, in such that, hey, there's never wrong time to buy real estate, because as long as you buy and hold long term, write out the volatility of what's going on, because over time, real estate has always increased in value. So we're going to some minor correction, but still very, very good enough. If the mortgage rate comes down to 6% for these years over, we might expect to see a housing frenzy. And then there's more competition, there's more demand, still limited supply. So we may see some even elevated multiple offer bidding war situation. So you don't want to compete in a market like that, because get priced out. Smart money, but in my mind, the smartest people pull the trigger now and to purchase and get under contract so they can buy now and wait instead of wait to buy the mistake. So that's my takeaway. Right? If you see a lot of value from this, as I conclude this, from this video, please smash the like button. I do more subscribers into my channel. I love to provide realistic and transparent content, realistic information, nothing doom and gloom and the negative headlines out there for the sake of clickbait. That's not what I do. Anyway, and also subscribe to my YouTube channel, and so you'll see a whole bunch of great content. And also, please subscribe to my website again, so you can become a member of our real estate investment club, so you can see a lot of real estate investing information. By being a free member of our organization, you'll receive weekly real estate investing news and education you not find anywhere else. Our club, our membership club here, help people to buy out-of-state turnkey cash flow properties. We surround ourselves with a network of turnkey providers and real estate agents, investment real estate agents, to help you buy turnkey cash flow properties in the affordable entry-level markets in the fastest growing area in the U.S., especially in the South and Southeast and some West areas. So you could achieve generational wealth. So again, if you want to become a true turnkey mom and pop real estate investor, become a free member of our organization. Who knows, you could really create some great well-strong real estate investor. Thank you so much. This is Seewing, and now looking forward to another great content. Thank you so much. Have a nice day. Bye-bye.